In this video, we continue our discussion on Chapter 7, where in our last video we examined a firm's production function. In today's video, we'll discuss costs to a firm by considering some preliminaries to then have our discussion on costs. Beginning with our preliminaries, currently we are seeking to develop a framework to explain how firms make decisions, where we need to answer how does the firm produce goods and services, what costs does the firm incur with production, and how much does the firm generate with the sale of its goods and services. In our last video, we addressed the first question in that firms produce goods and services based off of their production function, which showed the relationship between the factors of production to output, where we examined the properties of the production function as well as its rate of change through the marginal physical product. Now we seek to address our second question in terms of costs incurred to the firm through production. So to begin, when a firm produces goods and services, it will incur costs, that is, money flowing out of the firm, where all costs incurred by the firm will be referred to as total costs, where total cost is going to be the market value of all resources used to produce goods and services. But what does total cost include? It's going to include two components. The first being that a firm will vary some of its factors of production to produce varying amounts of goods and services, where this varying cost will be referred to as variable costs. That is, a cost of production that changes when output levels change. And in terms of our second component, a firm will have a fixed amount of some of its factors of production, regardless of the amount of goods and services being produced, which will translate to a fixed cost component, that is, a cost of production that does not change with output levels. So then, given these two components, we can then express total cost as the sum of fixed cost and variable costs, where, with total cost in mind, we can also examine the rate of change of cost through marginal cost, which is going to be the increase in total cost associated with a 1 unit increase in output produced. It's going to be the rate of change of total cost as mentioned, which then translates mathematically to being the slope of the total cost curve. So then, to give some context to these varying forms of cost, let us refer and relate them to our example of a firm who cleans cars. We know from our prior discussion of production functions that this firm uses a fixed amount of space, where they will pay rent each month for this space, so they are in some sort of contract, and this amount of rent does not change. Since it does not change, this will account for a fixed cost in that regardless of this firm cleaning 0 cars or 1,000 cars, they still have to pay this same amount of rent each month. Additionally, we know that they use cleaning equipment, where the firm is going to pay a fixed fee each month for this cleaning equipment from some other manufacturer. Or same deal with rent. It's going to account for a fixed cost in that they are in a contract and they are getting the same amount of cleaning equipment each month. Regardless if they clean 0 cars or 1,000 cars, they still have to pay this fee for the cleaning equipment. Then lastly, when we were looking at the production function, we were looking at how productive the labor was in terms of staffing decisions. So there's going to be a varying amount of labor, where this labor is paid a wage rate, where the wage rate is paid for each unit of labor or employee that is used. And so this is going to account for a variable cost in that if 0 employees are used, 0 cars are cleaned, 0 wage rates need to be paid out. Whereas if 1 unit or 1 employee is used to clean cars, then some wages must be paid. And if we bring a second person on board, further wages need to be paid, so on and so forth. So then in terms of our total cost, looking at it as our sum of fixed and variable costs, we then have that our fixed costs are going to comprise our capital in terms of our factor of production, which in this case is going to be the rent that is paid on the space, and the fee for our cleaning equipment. So this is going to be this left parentheses, rent plus fees. And in terms of our variable costs, this is going to account for our varying amount of labor, where they are paid a wage rate. So then our variable costs are going to be our wages. So then our total cost is then going to be the sum of rent, fees, and wages. So with this discussion on costs considered, let us now look at each of these cost structures for the firm individually. Beginning with fixed costs, the firm pays a fixed amount each month in fees and rent for its space and cleaning equipment, in that, as we mentioned, it does not vary with output levels. So here we have a graph in terms of production costs, where we're looking at fixed costs. Cost is going to be on the vertical axis, and cars cleaned is going to be on the horizontal axis. In terms of this rent for the space and the fees for the cleaning equipment, if the firm is cleaning 0 cars, such as we see at point A, they still have to pay for this rent and fees for the space as well as for the cleaning equipment. Likewise, if they start bringing people on board and they begin cleaning cars, some positive quantity, they still have to account for paying for the rent and fees for the space and cleaning equipment. And likewise, if they start cleaning further and further amounts of cars, this rent and fees does not change and still needs to be accounted for. So what this means in terms of fixed costs is that we have a horizontal curve that we are considering. Now, moving on to our variable costs, the firm pays a variable amount of wages based upon the amount of labor used to clean cars. Whereas more labor is used, the more wages that are needed that need to be paid out. Where in terms of our production costs, once again, cost is going to be on the vertical, cars cleaned is going to be on the horizontal axis. If the firm is using 0 amounts of labor, so 0 employees to clean cars, that means 0 cars are being cleaned, but they have to pay no wages out. If they bring that first person on board, that first person is able to use the space and the cleaning equipment to be able to clean cars, as we see with point B, but this also means that this employee needs to be paid their wage rate, so some costs are being incurred. Then if a second person is brought on board, this means further cars can be cleaned, as we saw with the production function, more input, more output. But by bringing a second person being on board, this also means that further wages need to be paid out, so our costs increase. And finally, if we bring that third person on board, more input, more output, so more cars are being cleaned, but they also need to be paid a wage rate, so then costs in terms of variable costs begin increasing as well. So here we see that we have an upward sloping curve in terms of variable costs. Since we know total cost is a sum of fixed and variable costs, what does that mean in terms of the shape of the total cost curve? Well, it's just going to be a translation of our variable cost curve, where cost is going to be on the vertical axis, cars cleaned is going to be on the horizontal axis, where we have a varying total cost structure due to our variable costs, in that if we have 0 labor being used, 0 variable costs are incurred. If we bring that first person on board, wages need to be paid out. Bring that second person on board, further wages need to be paid out. And bringing that third person on board, further cars can be cleaned, but further costs are incurred by the firm. The thing that's different though with total cost when compared to variable costs is that it's going to be non-zero when production is 0, as we see with point A. And this is going to be due to our fixed cost, where point A is the amount of rent and fees that this firm encounters for using the space as well as ordering the cleaning equipment from its manufacturers. So then, looking at all these costs together to get a better visualization of this, we have our total cost curve in purple, we have our fixed cost curve in red, and then we have our variable cost curve in blue. We see that variable costs is 0 when 0 labor is being used and is increasing otherwise. We see that fixed costs are horizontal and static regardless of the amount of cars that are being cleaned. And we see that our total cost curve is increasing due to our variable costs, and that it's non-zero when 0 amounts of labor being used due to our fixed cost, where we see that fixed costs and total costs intersect on the vertical axis, which then further shows us that total costs is just a translation of variable costs that takes into account fixed costs, which makes sense because by definition, total costs are equal to the sum of fixed and variable costs. So then now that we've examined fixed, variable, and total costs, let us conclude by examining marginal costs for the firm, where once again this is going to be the slope of costs for the firm. So we're going to be looking at how is cost changing versus how output is changing. And in terms of graphs, we're going to have total costs on the upper right, and we're going to have marginal cost on the bottom right. In both cases, cost is going to be on the vertical and cars cleaned is on the horizontal. The property that we want to observe with marginal cost is that it's upward sloping and increasing from points B to C and C to D, and the rationale for this is that we can attribute this due to diminishing returns on labor. So where we'll pick up in our next video is discussing average costs.